Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are detailing everything that's going on in the macroeconomy to help you make better home buying decisions. This week's 30-year fix is sitting at a 6.38, which is up from last week's 6.22. The interest rates are definitely climbing up, as well as the 10-year yield, and it could definitely potentially come back down, but there are a lot of things that need to happen geopolitically and economically for that to happen. We're going to dive into all of that whenever we get over to the chart, so let's hop on in. All right, so as we can see, the U.S. 10-year has climbed up considerably since the beginning of March. So this beginning of March is where we probably saw interest rates dip down below 6. They have climbed up considerably as of March 27th. That's probably where we're seeing that 6.38. Now, we see right now the 10-year is starting to back off. And what we really need to be watching is inflation. And in order to watch inflation, we really need to pay attention to oil and how that's impacting the inflation narrative. So, again, with the U.S. 10-year yield, right, it's a yield for bonds. And when bonds are being sold off, the yield will rise and vice versa. So it's a one-to-one comparison, and we can see this blue line right here. This is a decrease in the bond market since the beginning of March. So we can see that the yield has continued to climb as bonds have been selling off, and bond selling off is due to what I believe to be inflation fears, because why would you still weigh your money when inflation is expected to pick up the pace? So that's really a reduction in buying power. So in order to make it, a wise investment for anyone buying these bonds, you have to offer pretty high yields in order to offset the reduction in buying power, aka inflation, for anyone that is going to buy bonds. So, all right, this week we had Powell spoke, and I actually didn't listen to this. I've heard that it was a more neutral take. It's probably worthwhile to go back and listen to this, but I believe he spoke at Harvard, and there were audience questions. So we also had JOLTS job openings this week on Tuesday, March 31st. And that opened lower than previous for job openings, but pretty much at forecast. Wednesday, April 1st, we have ADP non-farm employment change. So we're going to see how the labor side of the market is doing. Also going to see retail sales and then manufacturing. We also have unemployment claims Thursday, and then Friday we have average hourly earnings, non-farm employment change, and unemployment rate. So really all of the labor market. Next week we have services PMI, the 10-year bond auction, which is worthwhile to look at, Wednesday, April 8th at 1:01 p.m. And then meeting minutes is, that's definitely interesting because the expectations for the Fed cutting rates went from about 2 rate cuts this year to 0. So we really want to keep an eye on kind of what the Fed is thinking, if for nothing, just to see what they are expecting inflation to do. And then we have PCE, and then Friday, we have CPI. So we have a taste of inflation next week to see how that's going. Like I said, on the 30-year fix, 6.38 as of March 26th. And then, February 26th is when it was at 5.98 for the average 30-year fix. Now, keep in mind, this is just how they gather this data is based off applications. So, we don't know if that includes any kind of discount points or anything like that, but the average has climbed substantially for the entirety of March. Like I said, with the Fed, we were expecting 2 rate cuts this year. that has gone down to 0 this year, just pauses, and then potentially 1 at the end of 27. So we'll monitor this and see, but this is a lot less than what the market was pricing in previously. And that is due to supply shock from oil, which causes, inflationary pressures. Now, I know some Fed members have, probably like Mirren, but there are some Fed members that have said that oil won't have like a sustained impact on inflation. I believe they said that. Don't quote me on that, but it really just depends on how long oil stays elevated, and what will happen with the Strait of Hormuz getting opened up by Iran. And, I'm not an expert in energy, so it's definitely best to keep an eye on that and just kind of listen to the Fed and see what they have to say about that. But that's all I got for you this week. So if anyone has any questions, give us a call at 877-TEAM-MBL or visit us at, give us a call at 877-TEAM-MBL or visit us at www.mortgagesbylinda.com. Have a great week, everyone. Bye.